All right, let's talk about gold. If you try to look up where its price is headed in the next 10 years, wow, you're going to see predictions that are just all over the place. But here's the thing. What if the price of gold isn't really just a number? What if it's something more? We're going to dive into the huge, powerful forces that are battling it out right now to define the future of money itself. And guess what? Gold is sitting right in the middle of that fight. So the real question is, which future are we actually building?
So, which is it going to be? A world where a single ounce of gold is worth 5 figures, or one where it basically just stagnates, right where it is today? You know, the gap between those two numbers is massive, and it represents two completely different futures. Understanding them tells us way more than just where we should put our money.
And that's really the heart of it. That final price tag, whatever it is basically going to be a verdict, a report card on how we manage all the big stuff, debt, inflation, and global trust over the next decade. So let's explore both sides. First, we'll build the bull case for gold absolutely shattering records, and then the bear case for why it might just get left behind as a forgotten relic.
Okay, let's start with the bulls. This is the future where the price of gold doesn't just climb, it explodes. And importantly, it's not driven by simple investment hype. No, this scenario is all about a fundamental breakdown of trust in the traditional financial system that we've all known for decades.
And just look at who's leading the charge here. This isn't Wall Street hedge funds. We're talking about the world's central banks, especially in the East. They are not buying gold for a quick profit. They're buying it because they want something neutral, something safe, in a world where the US dollar can be, and has been, used as a political tool. This creates a massive new buyer in the market who, frankly, doesn't really care about the price.
So, the whole bull case really stands on these 3 huge pillars. First, there's the de-dollarization we were just talking about. Second, you've got a global debt bomb that is so enormous, governments might not have any other choice but to just print money, to inflate their currencies, to deal with it. And third, what you could call a retail awakening, where regular people like you and me see our savings getting eaten away and start looking for a real safe haven outside the traditional system, just like the central banks are doing.
This quote, right here, it just perfectly captures the appeal of gold in this kind of world. It's a physical thing you can hold. There's no counterparty risk. When you think about a world with staggering debt and really low trust, does a $10,000 price tag really seem that crazy? Or is it maybe just a logical conclusion when a system is under this much pressure?
Okay, but hold on. Before you run out and start buying up gold bars, let's flip the script and build the counterargument. What does a 2035 look like where gold is still stuck at $2,000? Well, this is the world of system success, where faith in our economic institutions, in our currencies, actually gets restored.
This number, 20%, is such a powerful reminder from history. Back in the late 1970s, Fed Chair Paul Volcker hiked interest rates to an absolutely unthinkable 20% to crush runaway inflation. And you know what? It worked. But it also completely flattened the price of gold for the next 2 decades. So you gotta ask yourself, what if we saw a modern version of that?
The bear case is built on 3 totally opposite forces. First, that Volcker moment 2.0, where central banks get serious, they raise rates high, and suddenly government bonds look extremely attractive again. Second, imagine a new tech-fueled productivity boom, maybe from AI, that gets everyone excited about growth assets like stocks instead of defensive things like gold. And finally, what if we see a return to geopolitical peace? That would pretty much erase the central bank's main reason for stockpiling a neutral, wartime asset in the first place.
So here's the bottom line for the bears. Gold is a fear asset. It thrives on uncertainty and anxiety. In a world defined by optimism, incredible innovation, and global cooperation, money just flows into things that create wealth and build the future. And in that kind of world, yeah, gold kind of gets left in the dust.
Now, as if those 2 scenarios weren't complicated enough, we've got 2 new X factors in the mix that just didn't exist in previous gold cycles. These are the digital wildcards, and they could completely change the game by 2035.
First up, the elephant in the digital room, Bitcoin. So what is it? Is it digital gold, a direct competitor that's siphoning away demand from investors who would have otherwise bought the real thing? Or is it actually a gateway drug? Is it teaching a whole new generation about the value of scarcity, maybe leading them to buy both? By 2035, the relationship between these two is going to be a huge defining factor.
And the second wild card? Central bank digital currencies, or CBDCs. You can think of it as a digital dollar that comes straight from the government. Now, on one hand, this could make our money system way more efficient. But on the other hand, it could give governments the power to track every single transaction you make and maybe even program your money to expire. Now, in a world with that level of control, does private, untraceable analog gold become the ultimate form of financial freedom? It's a huge question.
So, with all that on the table, where does this leave us? Well, like I said at the very beginning, this isn't really about predicting one single number. It's about looking at the whole question in a different way.
This slide really lays it all out, doesn't it? The price of gold in 2035 is just going to be a mirror, a reflection of the kind of world we've built. The $10,000 world is a world of system failure. It's defined by debt, conflict, and low trust. The $2,000 world, that's a world of system success, one defined by innovation, stability, and cooperation. And this, right here, is the key takeaway. A high gold price isn't really something for investors to cheer about. Think of it more like a thermometer showing a really high fever for the global economy. It's a symptom that the system is broken. So ironically, a low, boring gold price, that would be absolutely fantastic news for all of us because it would signal a healthy, growing, and cooperative world.
So, at the end of the day, the question isn't really about predicting a price. It's about looking at the trends we see right now in debt, in global politics, in technology, and asking ourselves a much, much bigger question. Which of these two paths are we actually on? Which one of these worlds are we building right now? That is the real story gold is going to tell us in 2035.